If you are still confused on the ICT Power 3, this video will provide you with a step-by-step breakdown of how to trade the ICT Power 3, what the ICT Power 3 is, how to identify each stage, accumulation, manipulation and distribution. Make sure you guys watch the video to the end, as I will be going in detail about each stage and how to identify it on the real life market. So I'm going to finish the video on TradingView, showing you guys a couple examples on the market. So let's get into it. Now, before I get into the video, I just want to go over my service, pass my challenge. You guys have been loving it so much. People are getting funded every single day. You guys do not want to miss out. This is a zero risk investment. I will pass your challenge 100% guaranteed, or your money back, every single penny. The price you pay us and the price you pay for the challenge. Furthermore, if you are still skeptical, you do not have to pay us a single penny until we pass your challenge. This is absolutely the safest investment you guys will ever take. As you can see, if you join the group, you can see so much proof of us passing people's accounts. People are even getting paid out. People are getting funded every single day. So guys, there's going to be offers on the group, so I join up. If you do not join, someone else will take your slot. They will be funded and you will not. So let's get back to the video. Firstly, before trading the ICT Power 3, we want to know what is it. So the ICT Power 3 is a trading model based on 3 phases: accumulation, manipulation and distribution. So to start off with accumulation, accumulation refers to market consolidating, where smart money may engineer liquidity through support and resistance in order to tempt early buyers and sellers into the market. Now, what do I mean by this? In the accumulation phase, accumulation is the ranging market. As I said, market is consolidating. There is being liquidity formed through support and resistance. As we know, retail traders love to trade support, resistance, trend lines, etc. So market tempts these retail traders into placing their trades through support and resistance before taking them out either to the upside or downside, wherever market desires to go, and using them as liquidity. As in any financial market, if you want to buy an asset, you have to be able to sell an asset. So large market participants need to be able to gather liquidity in order to place their huge orders. Now, moving on to the manipulation phase. Market breaks structure from this consolidation, taking out any early buyers and sellers as their stop losses would presumably be hit. Also, another form of manipulation that would be going on is breakout traders being entered in with their stops. They have buy stops, sell stops placed. Market triggers them and quickly reverses. Market takes them out as liquidity. Now, why is liquidity so important? As I said earlier, if you want to buy an asset in any scenario, so I'm going to use iPhones as an example as it's tangible. So if you want to buy an iPhone from the Apple store, they need to have the iPhone in stock. So if you want to buy an iPhone, they have to be selling an iPhone. If you want to sell an iPhone, you need to have someone willing to buy the iPhone. So I hope that is easier to understand like that, which brings us on to distribution. Market then distributes price to its original desired position with the liquidity engineered. Now, this is where we're looking to catch in on the trade, as this will get us the largest move, the most pips and the highest risk to reward. So now, what times and pairs can we trade the ICT Power 3? So I recommend New York session and London session. So I've included times for you here: 8 to 5 a.m. New York time EST, and I've included UK time below for you guys in the UK. 2 p.m. to 11 p.m. UK time, 8 a.m. to 5 p.m. UK time for the London session, 2 a.m. to 11 a.m. New York time for the London session. So pairs: GBP USD, Euro USD, US 30 and NAS 100. Now, this is from my back testing. I recommend you guys go back test the strategy for yourselves and find what works best for you. However, from my back testing, these 4 pairs work really well. So now moving on to what is the ICT Power 3 and how does it look on the live chart. So here is our accumulation phase. As you can see, market is ranging, market is consolidating. I know I haven't included it in this example. However, there was a swing high right here. I should have included that. My bad, guys. However, you can clearly see this accumulation. As you can see, we've got support, liquidity right here. We've got some resistance here. And you can see market then manipulates this liquidity, taking it out before market takes out liquidity another time right here, breaking this high before market gets a change of character down here, leaving a fair value gap, when market returns to the fair value gap and sells off to the price it originally desired to move to. So Now I'm going to be going into a step-by-step breakdown on how to trade the ICT Power 3. This is just a quick summary, and guys, make sure you stay tuned to step 5 as this is the most important step. You guys do not want to miss it. So moving on to step 1. Alright, step 1, this is our accumulation phase. You want to identify a ranging or consolidating market within the London or New York sessions. So once we've identified it on this chart, for example, we want to go into the 5 or 15 minute time frame and wait for a liquidity sweep. As you can see here, we quickly get a liquidity sweep as this high is broken right here, this swing high. This resistance is broken here, market takes out this liquidity to the upside. Now, what is a valid key liquidity level? I've listed them down here. You guys can go read through it here, pause the video, read through it. These are all valid key liquidity levels. So once that is done, we can move on to step 2, which is manipulation. As market has taken out our liquidity, we want to wait for another liquidity sweep on the 1 minute. This is our liquidity sweep B, and this is our liquidity sweep A. Now, this takes us on to step 3. Once we've got our liquidity sweep on the 1 minute, we want to wait for a market structure shift with displacement. Now, what is a market structure shift? So, a market structure shift is when market changes in trend. So, if we are bullish, market forming higher highs, higher highs, higher highs, lower lows, lower lows, lower lows. Market then changes in trend with displacement. Displacement means market gets strong candles like this, as you can see. Market has a lot of volume coming down, changing trend, showing where market really wants to move. The market structure shift is not valid without displacement, as displacement confirms to us that market wants to move in its desired direction. For us, this would be bearish, for example. So we know market wants to move bearish, as you can see. Lots of volume here, engulfing candles here. So for the market structure shift to be valid, we need the candle, the body of the candle, to break below a significant low on the market. Now, I've marked out a significant low here. Some people may say this is the significant low. Some people may say this. Whatever you say, each candle has broken each significant low. So this candle, the body of the candle closes below this wick of this candle and this candle. And this body of the candle closes below this candle. So this is a valid market structure shift. Moving on to step 4, targets and entry. So for entry, I'm going to go back to this slideshow just to show you guys a bit clearer. As you can see, we want to enter off the first fair value gap formed after the market structure shift. So as we can see, where's our first fair value gap? It's right here. As you can see, this is a beautiful fair value gap. It's clear. Now moving on. We want to enter off the 50% mark of the fair value gap. I do this as in most scenarios, market will always come to the 50% mark. So once we've entered off our fair value gap, stop loss above your swing high or low. In my example, it was above this liquidity sweep. It might be a bit high for you guys, but it's all up to your own risk management strategy. As for take profit, you want to target opposing liquidity. This can be equal highs, equal lows, relative highs, trendline liquidity. It could even be, you could even place your take profit at opposing order blocks, opposing fair value gaps. So this takes us on to step 5, which is just wait for the trade to play out and get your profits. It's that simple. This strategy is insane. It works amazingly. I want you guys to backtest this and see for yourself how great it is. And if you're having any problems with the strategy, just let me know in the comments. I'll answer any questions you have. So it's time to move on to the real market examples. So I'll be going through a couple examples in the real market and explaining to you. I'll be breaking them down and explaining how they work and why they work. So let's get into it. Alright, I'm on EURUSD now. This is the first example I'm going to be showing. This trade hit for a 1-to-4 risk to reward ratio. As you can see, this is a beautiful setup. So first I'm going to start off by removing all drawings on my chart, and I'm going to replay the market to here. As you can see, this market is ranging currently. We have no clear bias. So this would be our accumulation phase. As you can see, the market makers are engineering liquidity through support resistance, where support is being made and then taken out. Resistance is being taken out. Now, we want to wait for this accumulation phase to be swept. So we're going to hop into the 15 minute and wait for a liquidity sweep. Now from here, I'd hop onto a lower time frame such as the 3 minute. And then I'll let market play out and see what market does. Now guys, I'm currently waiting for a market structure shift. I'm waiting for this high to be broken. This is the true market structure shift in my eyes, as this shows that market wants to really move bullish, where we can start taking longs from the market. All right, guys, now I've gotten my market structure shift. So now I want to start looking for entries. So I do see a lovely fair value gap right here. However, right below it is a beautiful order block. If I go into the 5 minute, this order block will be a bit clearer, as you can see. Now, this order block is valid. One, we get a break of structure to the upside, as you can see right here. Secondly, we leave a lovely imbalance in the middle, which market would love to return back to before continuing its desired direction. And thirdly, we get a lovely engulfing candle. Again, if I hop into the 5 minute, you can see that engulfing candle right here. Now, make sure you guys watch my video on order blocks if you want to find out how to trade order blocks the ICT way. So I'm simply going to enter aggressive of this order block. Now, as for my stop loss, I'm going to give the trade a little bit of room to play around with at 7 pips. Now, I don't want you guys to put your stop loss too tight. If you put it here, that's unrealistic. 2 pips. Market is most likely going to take you out. I'm teaching you guys how to be a realistic trader, how to take real trades in the market. So as for targets, I found this lovely area of equal highs, whatever you want to call it, where market would presumably go to. Either market would take out this swing high, or it would reject off this high right here. So that's where I'm going to place my take profit. You could also place your take profit at, say, any fair value gaps you find, any opposing order blocks. However, that is all up to you and your risk management strategy. So if I play out the market, boom, you can see our entry right here. And then you can see how the trade ended up playing out. There we go. Smashed our take profit with a bit more even. So we caught 30 pips from this. This is a nice 1 to 4. However, market played out to about a 1 to 6 at 42 pips, but it's unlikely you would have caught that, as there's nothing to really place your take profit off, unless there was an order block somewhere inside of here. I do not know. However, that's example number 1, and I'm going to move on to the next example. All right, now I'm on NAS 100. I'm going to be showing you guys this trade, which ran 1 to 2. So first, I'm going to start off by removing all drawings off my chart and replaying the market. Now, I'm going to be showing you guys everything that happened from the accumulation phase first. As you guys can clearly see, there's a beautiful area of equal highs right here. Now, this is a lot of liquidity, as retail traders will be looking to trade resistance off these equal highs, where market, if we hop into the 5 minute, you can see market takes out these equal highs right here. Now, if we hop into the 1 minute, we can see, if I replay the chart a little bit, you can see we get our swing high right here. And let's see if market takes it out, which it does. Now, all we have to do is wait for our market structure shift right now, which we do get below this low right here. And you can see this is a valid market structure shift, as the body of the candle closes below the low of the wick of this candle. So now we have to start looking for entries and for valid fair value gaps. So what do I see? I see a beautiful fair value gap right here. This is the extreme fair value gap. Now, not bad, guys. Now I'm going to enter off to 50% of the fair value gap. Simply place my limits and wait for my trade to be triggered. As for stop loss, I'm going to place it right at this liquidity sweep right here, right at this swing high. As for take profits, I want to target opposing liquidity. Now you could target here, you could target here, you could target here. However, keep it realistic, guys. I would target here, for example. It's very important to partial, guys. So your take profit 1 could be right here, take profit 2, take profit 3. Now, if I play out the market, you can see we get triggered in right here. And you can see the trade plays out beautifully. There we go. Now, if I just give you guys a quick summary, we had accumulation here, resistance equal highs, retail traders try to trade off these equal highs, market takes out their liquidity. Again, we get a swing high right here, market takes out this swing high before we get our market structure shift, confirming that market wants to move bullish, not bullish, bearish, showing us market is bearish, it wants to move in this direction. So that confirms it for us. We get a fair value gap where market should return to. We mark out the 50% mark of it, we enter off the 50% mark, simply target opposing liquidity, and there we go. That's how we catch our 1 to 2. And now that brings us to the end of the video. Again guys, do not forget to check the first link in the description for me to pass your challenge guaranteed. If not, you'll get refunded every single penny you pay us and every single penny you've paid for the challenge. This is a zero risk investment for you guys, so make sure you check the first link below, join the Telegram, and you guys will find my Telegram on there where you can ask me questions and I will solve any of your worries. Now, you do not have to pay us a single penny until we pass your challenge. So that's it for today's video, and I'll see you guys next time.